Hi, it's Gayle. Thanks for joining me again today. We are talking about diversification. Now, I used to work in a bank, a very major bank. And many years ago, people thought diversification was having a term deposit in 4 or 5 different banks. Let me tell you, that is not diversification. It's just a pain in the neck because you've got to trot from place to place to place to fix them all up. What it is the same asset class. The asset class is fixed interest. Now, if interest rates go up, wonderful, but you don't get any capital appreciation. You only get income. And the tax man loves you because you're creating more income and they can tax you. However, if you consider other investment types that are growth focused, that includes property, maybe your own home, commercial property, and any other physical property that you can think of. They tend to be valued only ever twice that you really know the pricing on. The day you buy and the day you sell. Anything else in between is a subjective valuation based on a bank's decision or a valuer's decision of what your property is worth if you want to borrow money against it. For people like me, that's called leverage. You can use the leverage by taking some of your equity out of those properties. And traditionally in Australia, where there is a massive love affair with property, people go, oh, let me take equity out of this house and go and buy something else, physical property. Those things all come with, those property investments come with a degree of risk, which is, like all things, relative to your experience and also how much leverage you have taken on that asset. Many times I hear people talk about taking 100% borrowing from partly from the new property, partly from their existing property. I don't know of any investment that it's smart to do 100% leverage in, but there's a lot of property promoters that will tell you that's the best thing for you. The other type of assets that have capital appreciation are share-related investments. Now, those share-related investments can be Australian-based, and those Australian-based ones come with some tax advantages. If you're having a company that pays dividends, they usually provide franking credits. Not all, but many do. In overseas markets, where the tax situation is not the same as Australia, you have companies that really never provide income. They just have capital appreciation. Now, those two different share markets, the Australian one and the international share markets, are valued every day, multiple times a day. Most people don't realize that if a share is bought in company A, B, or C, every time somebody buys a company share, they are effectively revaluing the share market. Now, you will see, and I'm sure you've seen it happen a lot, the media bang on about, oh my gosh, the share market went down so many points. So many billions have been wiped off the share market. But they never, ever tell you when that correction has recovered and people have still got the same value of investment units, so shares, units in exchange traded funds or managed funds. Those things, as long as your unit number doesn't change, the value of your investment going down or up in line with market changes is called volatility. Now, volatility really means a changing value, and that changing value happens because somebody thinks that the company that they just bought shares in is worth more or less than what somebody's willing to sell them for. What that means for somebody who's a little bit nervous about shares is, as long as you don't actually have to liquidate your holding while the market is down, you're still holding the same number. So that number can change in value. As we talked, it can change in value every single day. So the purpose of this chat is to remind you that not all investments have to be scary. You just have to measure the risk that you're prepared to take and balance that by getting the right mix of asset classes inside of your portfolio. Now, if you need to know more, my name is Gayle. My number is 0407 159 298. I'd be happy to explain some more to you. Contact me if you're interested. Bye.